Good morning, everyone. My name is Sriram from the Commodity and Currency Research Desk. This is the Commodity and Currency Outlook for 16 September 2022. So, starting with the energy side of things, international NYMEX oil and gas prices tumbled in Thursday's session. Oil fell by over 3%, while the gas prices also fell over 8%. The gasoline futures on NYMEX also fell by about 5% in yesterday's trade as authorities may have averted a US rail strike which could have hit fuel supplies across the US side of things. Expectations of a weaker global growth and continued strength of the US dollar also weighed on prices yesterday. Moreover, worries over stagflation and weak Chinese demand outlook also kept prices upside limited in Thursday's trade. Meanwhile, on the inventory side of things, on the gas side, the inventory data from EIA showed that working gas in storage was about 2771 BCF, which is slightly higher compared to previous week, and this also weighed on the gas side of things in yesterday's trade. Looking ahead, we see crude prices could continue to struggle amid recession fears, and which will definitely dent demand for the fuel. Overall, we see that markets can continue to weaken further. Some support can come in the form of tight supplies in the market. So overall, bias still remains on the weaker side of things, and any rise should be met with some fresh selling in the market. So we see more correction for crude and natural gas prices over the coming few days. Moving to the bullion side of things, international gold tumbled to a level since April 2020 in yesterday's trade, hurt by elevated US Treasury yields and a firm dollar as bets of another large rate hike by the US Federal Reserve dented demand for the bullion side of things. Markets have already priced in a 75 basis points and also are slowly factoring in a 100 basis point in the next week's meeting. On the data front, we saw that US retail sales was slightly better than expected, while jobless claims also dropped and was slightly better than expected, and this pushed the dollar higher and weighed on the bullion side of things. Looking ahead, we see gold and silver prices could continue to struggle this Friday's trade and possibly till the Fed meeting next week, as the elevated dollar and prospects of aggressive rate hike by the US Federal Reserve will weigh on sentiment. So range for December comics gold will be anywhere between 1660 to 1700, but a break below 1600 will pull prices all the way down to 1600. On the domestic side, we see a major support at 49,000, but a break below that will pull prices all the way down to 48,000. On the upside, we see for the domestic side, we see now a major hurdle at 50,000 for the futures contract. Moving to the base metals, copper tumbled in yesterday's trade as US gained, US dollar remained on the higher side of things. However, aluminium prices remained resilient and ended the day on a higher note as Europe continued to deal with a power crisis that has cut the output of the metal. Reuters data showed that around 50% of the EU aluminium production capacity has been forced offline due to the power crisis there, which could see the energy intensive metals continue to outperform at least in the short run. Looking at, we see copper prices again have started on a weaker front. Again, prices continue to remain weak as markets look ahead to that Fed event next week. But aluminum prices continue to move higher amid supply concerns. So aluminum can buck the base metal trend and remain on the positive side of things, while international base metals can continue to struggle. Moving to the currency side of things, Indian rupee continued to weaken in Thursday's trade and has remained weaker this Friday morning, weighed down by strong dollar demand from oil companies. The rupee also weakened amid speculation that RBI has not intervened and may not come in the markets or may come in the markets beyond 80 levels, and that continue to keep the dollar demand intact by oil companies. Asian and emerging market peers were extremely weak on Thursday's trade and continue to remain weak this Friday morning trade, with the offshore Chinese yuan remaining above, or I should say remaining below the 7 level mark, and it has broken that level for the first time over a long period of time. So I think more weakness in the Asian currencies amid aggressive rate hike path by the US Federal Reserve will continue to weigh on a domestic unit as well. We see that that dollar demand from oil companies and FII outflows will also continue to weigh on sentiments. But the main trigger for currencies will be that Fed event next week. As I mentioned earlier, 75 basis has been already been priced in. So markets will await if whether the Fed decides to hike rates by about 100 basis points, and that will be an extremely negative sentiment for the rupee going forward, and possibly we can see rupee test 80.30, 80.50 in the coming few days if it indeed happens. On the bond side, finally, Indian benchmark 10-year continues to move higher. It ended higher on Thursday and remained higher this Friday as aggressive markets are slowly pricing in aggressive rate hikes by the Fed, but also an aggressive rate hike is expected by the Reserve Bank of India to curb the inflation side of things. So we see the 10-year benchmark remain between 7.20 on the lower side to 7.30. Of course, traders will be bracing for fresh supply from the Reserve Bank of India today, but while the absence of any cues of inclusion from the global bond indexes will also keep investor nervous. But the 2-year US 10-year is actually at June 2005 highs and remain sharply above the 10-year benchmark USB benchmark bond yields, reflecting the current current interest rate situation expectations from the US Fed. So overall, we see bond yields continue to remain elevated till the Fed event happens next week. So till that time, we feel the USD and a spot pair can remain within 79.2025 to 80.20, while bond yields will remain between 7.15 to 7.35, while the dollar index can remain within 109 on the lower side to 110 on the upside of things till that Fed event. So that's it from our side. Thank you for listening. Have a pleasant day and a great weekend ahead.